Good morning, everyone. I am Sam from NATP. I have joined with me today a very special guest also from NATP. But first, I want to thank everyone for checking us out this morning. It's early for some, depending where you are. And we just really appreciate you being here because we are going to discuss a very, very important topic today. But before we do that, I mentioned that I have someone special from NATP with me, Sherry. Sherry, why don't you, if you don't mind, introduce yourself? Tell us a little bit about yourself.
Hey, Sam, thanks a lot. And I'm really not that special. I just happen to work with Sam and enjoy
Well,
it. But just a little bit about myself so you know who I am, I guess. For the past many years, I worked in private industry as an accountant, and then I switched to do taxes in small accounting offices. And every one of those accounting offices were NATP members, and we went to their education, and I loved it. And then one day there was an ad in the paper, way back when you did that kind of thing, that said NATP needs some researchers. I raised my hand, got hired, and was never regretted the moment since then. It's been a hoot working at NATP, and I just love it. So that's a little bit of my history, Sam.
Wonderful. Well, we're very grateful to have you, Sherry. You are just a wealth of knowledge. And so I'm really excited for this discussion today and for you to be able to share all of your expertise, especially around what we're going to be discussing today, Schedule 8812. So this one is probably familiar to a lot of people, but not familiar in completing it. So roughly 39 million households received monthly advanced child tax credit payments this past year. During the next few weeks, those advanced payments will need to be reported and reconciled on 2021 individual tax returns using Schedule 8812. Sherry, what is the latest with this schedule? Why are we talking about it today? What's important? What's going on?
Well, as you mentioned, people received advanced child tax credit payments, and those need to be reconciled to what they are truly eligible for. Okay. And some might even need to pay some of it back or all of it back. But we'll get into all of that. What happened was kind of like a little memory lane thing we're going to walk down for the moment. Prior to 2021, we all know the child tax credit was $2,000, and it was comprised of two components, a refundable component and a non-refundable component. That non-refundable component was just a good old-fashioned child tax credit. The refundable component, that was the additional child tax credit. And that was always calculated using Form 8812. Okay. So now, fast forward back into 2021, along comes the American Rescue Plan Act, and it changes the child tax credit. And now for 2021 only, at least as far as we know, only 2021, the child tax credit became fully refundable, meaning that refundable portion of the additional child tax credit that kind of was sucked into the child tax credit for 2021. And now, if you stop to think about it, Schedule 8812 for the advanced child tax credit, or I should say the additional child tax credit, that's no longer needed. It's kind of obsolete. So now we have to repurpose it to reconcile our advanced child tax credit payments that we're all receiving. And so that's what the beauty of the 8812 is now. It's now not used for additional child tax credit, it's used to reconcile the advanced child tax credit that we all received. Okay. Now, just a little bit more history. Like I said, we were getting child tax credits of $2,000. Now they've bumped up to $3,000 or 3,600, depending on the age of the child. You know, those under age 6 get that extra $600 for this 3,600. And they also bumped the age up from age 16 at the end of the year to age 17 at the end of the year. So there's many layers of complexity going on here now with the new child tax credit. Also, there's different levels of income. To get the 3,000 or the 3,600, your income has to be below a certain level. Once taxpayers, depending on their filing status, go over this level, now this new amount, the 3,000 or the 3,600, starts phasing back down to the original 2,000. All right. So that's one level of complexity. Now, we, starting in July, started receiving payments or those advance payments of the child tax credit. Now, what happens if somebody is receiving advanced child tax credit payments and whoops, we're not supposed to be getting those things? What's going to happen now? Well, part of that or all of that or none of that is going to have to potentially be paid back. And the 8812 is going to help us calculate that also. All right. And again, it's going to depend on the taxpayer's income range as to what gets paid back, if any of it does. Okay. So, like I said, this 8812 has been repurposed. It's been changed from a very simple additional child tax credit form to a rather long and lengthy, shall we say, new advanced child tax credit reconciliation form. That's not the exact name of it. And the exact name of it, oops, accidentally escapes me for a second, but
All
we'll
right.
come into that. Doesn't really matter. We just really need to know what it does. All right. And even though, Sam, you said we're experts in this, we're all not experts in it this year. We are all in the same boat, kind of fumbling along, but we're going to make it work and we're going to do an awesome job together. What I want to mention though with the 8812, it is broken down into three parts. Part one, which consists of A through C. Now this is going to calculate your allowable amount of the child tax credit and the other dependent credit. And we can't forget the other dependent credit of $500 that usually kind of tags along with the child tax credit. And like I said, this part one is going to calculate the amount of those credits that the taxpayer is eligible for. Then it's going to compare it to the amount they are eligible, that their advanced child tax credit was. Okay, sorry if I mix up my words a little bit. So the form is going to go, okay, say you had two kids, $3,000 each, you were able to get $6,000. Then the next part is going to go, okay, but we already sent you $3,000, meaning the IRS, we're only going to give you another $3,000 more. That's what this part one is going to do. Okay. Part two, that's going to be looking at the additional child tax credit when you have three filers or three children or more. We're not going to talk about that too much today, but that's what that part four is for. And then there's part three. This is the other part you're probably going to run into. This is going to calculate the repayment amount. We're lovingly calling it an additional tax, but this is going to be the repayment portion of the advance or that excess child tax credit that the taxpayer received that they were not eligible for. Okay? And in addition to the Schedule 8812, we're going to bring in a couple of worksheets to help us do this. You always have to have a lot in the mix. Otherwise, what's the fun in it, right? So as we're calculating the 8812 in part one, you're going to go through lines 4. And the first part is going to be what was your income or your adjusted gross income on your tax return. Then you're going to, and I'm not looking at the form right now, so I'm just kind of going off memory a little bit. Then line 4 is going to get to, you're going to put down how many kids you had. Were they eligible for, and I'm going to pull up a form so I can talk a little easier. Were they eligible for the 3,000 or the 3,600? Okay. And I should say, actually, line 4A is the number of qualifying children under age 18. Okay. So that's where we're going to get all those eligible for the child tax credit. Then we're going to look at who was eligible for the $3,600 portion of it, all those under age 6. And then, of course, you're going to have your difference. That would be eligible for the $3,000. Then you're going to look at a part that says how many are eligible. Oops, I'm getting ahead of myself. That was line 4. Now, line 5 is where we're going to jump to a worksheet. And this is still child tax credit related. I was trying to get ahead to the other dependent credit, but we don't need that yet. So after you're through putting down your adjusted gross income and the number of children under the age of 18 who are eligible for the child tax credit, the form and your software is going to take you to what's called a line 5 worksheet. And that particular worksheet, that's going to calculate through how much child tax credit you were eligible for originally, but then it's going to start comparing it to the income limitations. Okay. So if, say, you had 2 children, both under age 6, right? So you're eligible for $7,200. That's cool. Now the line 5 worksheet is going to look at that. Okay, we have $7,200. Then it's going to say, okay, but what if we have to phase you out? You have 2 children for $2,000. So now, that could be $4,000 with the difference, your phase out difference being 3,200. This line 5 worksheet, that's also going to look at the limits for a married filing joint couple. Let's say your 3,000 or 3,600 starts phasing out when you reach $150,000. So that's going to put the 150 on one of the lines on the worksheet. Then you're going to start comparing it to what their AGI was on the 8812. If there is a difference, now you're going to have to work in $1,000 increments. For example, say you had somebody with $150,500 for adjusted gross income. They're $500 over the AGI limit, so they start phasing out. But you just don't put down $500. You have to round up to $1,000. Now you take 5% of that $1,000 and you phase out their child tax credit by $50. So our $7,200 folks, you have to reduce that $7,200 by $50. So they're only eligible now for $7,150. So their income range has started phasing them down. You're probably going to run into this if you have some parents with pretty decent jobs and both are working. You're going to run into this a lot, I think. So I just wanted to mention that there is this phase out. Then once you calculate on this line 5 worksheet the amount that the parent is entitled to, you have to jump back to the 8812 line 5 and put the number there. Okay, so this way 8812 isn't overburdened with a lot. It keeps shooting you to worksheets. Now these worksheets, if for some reason you want to do this manually, they're found in the instructions to the 8812. There is a pub for the child tax credit. I believe it's 972. The IRS is not updating that for 2021. I believe the philosophy of this is a one-shot deal. We're not updating it for one time. We're just going to let it kind of sit in stone for a little while. And then in 22, we're going to go back and update it for like the normal stuff, the way it used to be, shall we say. That's if we don't make this permanent or anything fun like that, right? Which we know could potentially happen. So, or go for another year or so. But anyway, that's a whole other story. So that's just so you know where the worksheets are. They're in the instructions. Okay, so now you're working along on the form, and line 6 is going to want to know all your dependents who are over 18. That's where your other dependent credit comes in for the $500. So this form takes into not only the child tax credit, but also the other dependent credit, because they go hand in hand for the most part. So part 1 is going to calculate all the way out down to how much of a child tax credit and combined with the other dependent credit that the taxpayer is eligible. Partway through part 1, it's going to start looking at our limitations of the 200,000 and the 400,000. Remember, those come into play when taxpayers' income, or I should say child tax credit, phases down to $2,000. But it looks at that. So we have a lot of income comparisons going on with this form and a lot of phase outs going on with this. But that would be part 1, part A. That just calculates the total amount of child tax credits and other dependent credits with the help of the line 5 worksheet that the taxpayer is entitled to. So that you're going to use a lot. And then part 2, this is where we're going to go back and look to our advanced child tax credit, how much we received compared to what we were supposed to get, and how much more we can get. In a nutshell, that is it with that. But there's going to be a little extra twist with this. When you have a family that's getting child tax credit and the other dependent credit, now remember that child tax credit is refundable now, but that other dependent credit didn't fall into that. That is still a non-refundable credit, all right? Now we enter another worksheet, and that is called the Credit Limit Worksheet A, okay? That worksheet basically says, okay, here's the taxpayer's tax liability. they have all these other refundable credits going on and the other dependent. So it is going to calculate based on, when you have a liability or a tax liability and your non-refundable credits, it's going to say you apply the non-refundable credits that aren't carried forward or don't have a refundable component to them. You're going to apply all those first, and then you're going to get down to your ending tax liability. You know how you do the phase out for the non-refundable credits. That's what Worksheet A does. Some taxpayers could ultimately not get any of their $500 non-refundable other dependent credit. Worksheet A is going to walk you through that. We this month, for the month of March, there's another content specialist at NATP. She and I kind of look at writing the how-to articles and the 101 articles. We wrote the 101 and the how-to for, it's going to be in the March magazine, and there's going to be a lot of examples of completing the 8812. And one of our examples shows a phase out of the other dependent credit when it's coupled with, say, something like the American Opportunity Credit that has that non-refundable portion. The best thing to do is go look at that and walk through those steps so you can see how it works. That way you're comfortable with it if you ever need to explain it to one of your taxpayers. And that's a huge thing. Sometimes just educating our taxpayers is very, very helpful. But anyway, don't want to go down that tangent too much. But in a nutshell, this is what is going to happen on the 8812 this year. We're going to figure out how much child tax credit and other dependent credit the taxpayer is eligible for. We're going to reconcile that payment or that amount with how much they've already received, and then the taxpayers will get that additional amount. There's a caveat though. What if they receive too much? Yep, they might have to pay some back. And that's a whole nother set of rules that we're going to have to look into. And that is going to be calculated in part 3. Now, there are 3 pages to this 8812 this year, and part 3 goes on page 3, of course. And that's where you're going to have to do the reconciliation to see if anybody has to repay some of their child tax credit that they receive. Okay. Sam, I've talked a lot. Maybe
that's
you
a
should
lot
talk.
of info.
I probably scared everybody away, but remember, none of us are experts in this. Yes. I kind of feel bumbling in this in a way. It's like we're all learning it together.
And there's so many caveats too. It seems like as you're talking, it's each situation is so different.
Yep, there's levels of complexity that are just crazy. You have when you get to the repayment portion. We'll probably talk about that in a minute, I think.
Yeah,
so
yeah.
I don't want to get too far ahead of this.
Yeah. So. Well, and the other thing I wanted to bring up, Sherry, is that you actually went through and did this by hand. Is that correct?
Yes. Oh, this is something else I want to mention, gang. All right, when you do this, make sure you have all your tax software updates loaded in your software. I know a lot of programs. I know I work on Drake once in a while. I'm not promoting any software here, but I know they flash, urgent updates needed. Other ones do other ways to make you notice that they have updates that are needed. Update your software, because I started doing these examples. I help instruct an introduction to tax prep class for NATP. And at the end of December, I, by mistake, thought all the forms were complete, and I did them in UltraTax, and I came up with one answer. Then I turned around and did it by hand, going, oh, those don't work. And it turns out the forms weren't, the instructions with the worksheets, they weren't complete. So the tax software couldn't be updated. It was not the tax software's fault. It was my own fault because I was trying to rush it here. So if you have done any of these, input them early before any of these worksheets were finalized in the instructions, the software may not have caught up with you. These instructions, the software wasn't working properly until about a week or so ago. So if you put in any information early, make sure you have all your software updates in there and just go revisit those clients, because those numbers could have changed slightly. It was amazing. Once everything, all the software updates were made, all the forms were finalized, everything fell into place the way it works. Sometimes you need to work it by hand to make sure it's doing what you think it's doing or needs to be doing, especially if it's a new form, okay? You
Interesting.
don't have to do every one by hand, but it doesn't hurt to do one or two just to make sure you know what's going on.
Well,
So,
that's a really good note, Sherry. And just kind of speaks again to the importance of actually understanding the forms, understanding what you're doing, and just that base knowledge of tax prep that we're hoping everyone has. So we touched on this a little bit briefly before, but I want to talk a little bit more about 2021 change that makes this even more complicated. So parents had the option to receive the advance payments or not. Some opted out, which you had to do manually, but the default was to receive the payments. So for taxpayers and tax professionals, how does this impact everyone?
well, you might be the bearer of bad tidings, shall we say. If this taxpayer wasn't entitled to receive the advanced payment or the advanced child tax credit, you may have to tell them that they're going to have to pay some or all of it back. Oh, we are often the bearers of bad tidings. We're just the middlemen people here, right? We always have to impart this horrible news sometimes. Otherwise, you could say, "Hey, great, you should have had it for an extra child. Look what else you're getting this year. You're going to be the good guy or the bad guy. Who knows what color hat you're going to be wearing in this situation?" But this is where it's going to be crazy. My guess is this came out kind of fast and furious, right? All of a sudden, people are getting, extra money in their bank accounts. The news is saying, we're saying, everybody's saying, if you're not supposed to get it, go to the portal. Everybody has busy lives. What were the odds of anybody going to the portal? I, at NATP, I'm not with taxpayers on an everyday basis, advising them. So I don't know who all had a lot of people coming to them asking, should we or should we not do this, or how it was advised. But I'm guessing most people just let it ride. So we could be in a pickle where we have to tell people, whoops, look what happened. Or, oh, yay, look what you're getting. So it could go both ways here. So that's, yeah, we were
That's just
supposed to
part of
use
the
that,
job. Mhm.
but maybe we didn't.
Right. So what about the case then, Sherry, where and actually we were just talking about this too. Let's talk about this a little bit more. If the taxpayer receives more money than they were actually eligible for in those advanced payments, do you have anything else to add on that? What's going to happen? There's a repayment protection that I'm aware of. Can you tell us a little bit more about that?
Oh, this is a whole nother topic.
Okay.
Just a whole nother topic. Okay. We get all our advance payments. Okay, we're cool. We know that. We go, whoops, you weren't supposed to get that. Okay, cool. So what do we do now? We have to look at whether or not they need to repay it. However, as with the IRS, they offer some sort of gray area there. Let's call this the repayment protection area. So get this little wiggle room, right? If you were, and this is going to be most common with the unmarried parents, right? One year, one person claims the child, the next year, the next person claims the child. Now, all these advanced payments were based off of a reference year. Say somebody filed 2020, had the child. 2021, okay, the other parent's taking the child, not the one that claimed in 2020. But the IRS looked to the 2020 form and said, oops, yep, we're going to send that parent, their advanced child tax credit, not knowing that they weren't the parent that should be getting it. Okay, so now the wrong parent gets it. They come into your office, you go, oh yeah, here's my letter. This is how much you received. You go, oh, what is your income? And if a parent say there's a protection, the limit is up to $2,000. Let me get that out there real quick right now, because otherwise I'll forget. But if you have, say, somebody coming in that's head of household, maybe alternates the dependency with the child every other year with the ex-spouse. Say you have the head of household parent coming in and they hand you their little letter that says, yep, we only have one child. I received $1,500, right? But my income is $50,000. Whoa, she or he hit the level where they don't have to pay any of that $1,500 back. That was money to them. Score. they're not going to get the other $1,500 for the $3,000 total. The other person, the other parent claiming that child, will, depending on their income, in theory, get the full $3,000. Again, you have to look at the income ranges to see where they fall in that. That could potentially happen. So in this case, the parent who received the advanced premium tax credit in error didn't have to pay any back. Now, there's phase out ranges. Say you're head of household. If you have 50,000 or less, you don't have to pay anything back. Between 50,000 and $1 up to $999,000, just below $100,000, you are phased out. You pay some of it back, not all of it. But once you hit $100,000, it all goes back. So it's going to be a whole nother series of income levels. Now, there were several different income levels in the child tax credit this year. First one, $3,000 or $3,600. That was one series of income levels. This prepayment or this protection program, that is a whole different series of income levels. And of course, for the $2,000, we had the $200,000 and $400,000 income levels that we had originally. So we have all these different things that we're going to have to mentally keep in the back of our minds when we're working on this. But what I want to do right now is, okay, as I mentioned, we have a parent that received this advance payment, right? And we mentally knew in the back of our mind, yeah, no, this parent, yeah, they're going to be able to keep it all. They're eligible for this payment protection plan. Let's ethically talk about this, gang. What would you have advised this parent to do? Hey, you're not eligible for this. Go online, go to the portal, say, nope, don't send me this to it. I'm going to opt out of this payment. Or, hey, they're going to get this. This is their free money. By law, they can get it. Would you have allowed them or encouraged them to just, yeah, don't worry about that, get the money? We would love at NATP to hear your responses. We kind of talked a little bit about this yesterday as a group, and we thought we want to hear what you as a practitioner would advise your clients. Now, there's no right or wrong answer. We're not going to do anything with this. It's just we need to learn too what's going on at your level. And this is a good opportunity to share this, because this is one of those little ethical dilemmas that we have to talk about. By law, they were entitled to that money because, it came. And they were under the payment protection.
It is an interesting topic. Yeah, Sherry. So if anyone has any input that they would like to share, we would love to hear it. You can either leave it in the comments on the video. You can email us, natp@natp.com. And like you said, Sherry, there isn't really any clear, there is guidance, but it's a little bit of a gray area. What, how much you follow up with the client, and you can say one thing, but who knows what will happen.
I was very lucky. I was not put in this position. And so I didn't have to make this ethical dilemma choice. And, I'm on the fence. I haven't really thought it through. So I'm not going to commit one way or to the other. Yeah. I'm being kind of wimpy here, but it's okay.
Yeah.
We can all be it. It's something you need to think about.
Absolutely.
And everything happened so fast that more than likely, you didn't find out about this or even realize this until late in the year. And by then, it's already too late for the most part, because the wrong parent has received the advanced premium tax credit. But anyway, that was just a little fun ethical dilemma I wanted to mention. So
it is, definitely. So jumping quickly now to just a little bit of a different, same topic, but a different caveat. So there's been quite a bit of fallout from COVID-19, as we all know, for taxpayers, tax professionals. Everyone has been affected by it, financially, personally, etc. Not all parents have fared well, and some split. We have actually seen there is an increase in divorces. There's just a gambit of things. What happens to these payments in the case where the parents aren't living together? We kind of touched on this, but maybe just recap a little bit, if you don't mind.
If they were divorced prior to 2021, then they're going to be looking at maybe the wrong parent received it, whatever. They're going to have to do this reconciliation. If the fallout happened in, say, 2021, at the beginning of their year, they were married, the advance payment somehow made it to a joint account, but only one of them had control over that joint account and the other one didn't. And there's an argument going on. In theory, as it stands right now, my understanding is the payment between the household has to be split 50-50, each parent getting 50%. You're going to have the issue come up with, well, they got it all in that bank account. I didn't have access to that bank account, so I didn't get any of it. Okay, this falls more into the legal arena. So I kind of want, let's just say, because say the divorce is going on now during 2021, that's something that should really, if they start arguing about it and can't split it, they really need to have that talked out through their divorce process. Some will argue, now this is, again, there's two sides to every coin here. Some others will say, no, that person didn't get it. They can totally put down that they didn't get a penny and not split it. So tax preparers can go both ways, because I've talked to some, it's kind of like the economic impact payment last year. Well, even though the parents were supposed to split it, some took the stance, well, hey, they didn't get it at all, so we're going to put down they didn't receive any, even though they were supposed to split it 50-50. The IRS is going to do what they do on their end, and they're probably going to look at each person getting half. So it's, in theory, that's the way it's supposed to work. And I don't want to touch that too much.
Yeah, no, that's great.
Because I don't have a lot of experience with that one, and I don't want to lead anybody in the wrong direction, but just look to the 50-50 split, or maybe have it written into the divorce somehow, how they're going to do an whatever.
Yeah, no, that's
I don't want to go
into
into the legal arena or anything like that. So,
right, that's great information.
Yeah, but as this evolves and as we do this, there'll be more definitive answers. This is all at the beginning, and as we do it, things will become clearer as we go along in the next
and talking about a little bit clearer, one more little tidbit that taxpayers and tax preparers are dealing with is right now, unfortunately, receiving incorrect letters about the advance payments if they moved specifically. So can you go into a little bit more detail on this and what tax pros should do if their client is in this situation where they moved and they're receiving incorrect information?
What I want to mention, I don't know if any of you listening noticed that the IRS updated the frequently asked questions, topic H, our reconciliation of the advanced child tax credit, question 10. And this addresses just that. They updated their answer, and it's pretty much, if there's a problem, they want you to call 1-800-908-4184. That number is going to be in the 101 article. And also, it basically says that the taxpayers, you need to review the payments in the child tax credit update portal to ensure the payment was not returned. Okay, like if you move and close your bank accounts, okay, the big one is if you're doing direct deposit. Very often when taxpayers move, they close their bank accounts. Now that check has no place to go. It has to bounce back to the IRS. So it's been returned. Usually they'll shoot around and send you a paper check, but now you've moved again. And unless you've filled out the form to give the IRS your new address, that check is going to your old address and it may never be getting to you. Okay, so that's one thing. You have to look to see if the payment was returned. Then if you did not receive the payment and the payment was not returned, now you may request the IRS to trace the payment. If it is not determined that the payment was not received or was returned to the IRS, IRS records will be updated. Then you can exclude the payment from the aggregated amount of the advanced child tax credit payment that you report on the return. Okay, now this will allow you to claim, if eligible, that missing payment as part of your child tax payments on the 2021 return. What you need to do, though, is contact the IRS as soon as possible. They're open from 7 a.m. to 7 p.m. local time, and then I gave you the number. And then when you call the IRS, you must provide information about the payment date, the method, the status, and the amount that was displayed on the child tax credit update portal. So you need to have your ducks in a row. Whenever you do anything with the IRS says, hey, look, taxpayer, we think we're right, prove us wrong. That's kind of the approach. So you have to make sure you do your homework and get all your ducks in a row before you contact the IRS. But in light of this, they are saying that they are going to work with you, that there have been instances. So it's so very important to, if you have a client that you know is moving, get them to come in. And I may say the number wrong. There is a change of address form with the IRS, and the number is just escaping my mind right now.
Okay.
There's no harm in filing that change of address, especially when you know something like this is going on. You can do that. It's okay. So I myself, I moved from Wisconsin to Arizona this year. Yeah, I filed that form. No big deal. Now my EIP payment letter came addressed to me correctly, which was very cool. So it didn't go to my old address. It came to my new address. So no harm, no foul when you file that change of address. It just means all your information from the IRS keeps up with you.
That's
And
great.
that's a very important thing to have happen. All
Yeah,
right.
that makes it easy for everyone.
Yes, it does.
Yeah.
And pretty much that was the big thing. What I would really encourage you to do is go look at the question and answer for number 10 under topic H for the frequently asked credit questions with this advanced child tax credit. They update these credits constantly. So keep an eye on them, especially topic H for the reconciliation.
That's
Okay?
great to know. So, Sherry, we covered a lot today, which is wonderful. But there's still a lot that we didn't cover, which is shocking. So, tell us if someone wants to learn more, they need more education on this topic. NATP has a few options coming up. Can you tell us a little bit about that?
Yep. One of my amazing coworkers, she is going to be putting on a webinar on this topic on February 15th and 16th, Misty Erickson. It's going to be phenomenal. And in that webinar, she has much more time. She's going to go through some of the stuff I've been talking about in greater detail, and she's going to be able to present examples. So you'll have a visual, because right now we're not doing anything visual, which drives somebody like me utterly crazy. I'm a total visual person. It's like I can tell you all about the form, but until you see it, it doesn't make any sense. And I have a feeling a bunch of you guys are going, yeah, I know, you telling us the lines didn't do us any good. But when you see the forms, maybe a few notes will ring a bell. But anyway, go to Misty's webinar. And then also, as I mentioned earlier, our March Tax Pro Monthly is going to have a Tax 101 and a how-to on the 8812. Check that out. We have the printed version is only going to have one example, but the electronic version is going to have 4 or 5 examples or 3 examples with multiple variations of the 8812 and the different worksheets under different scenarios. So check those out if you have time to.
And professional and premium NATP members do get access to that. So that is exciting for those members. And like you said, Sherry, the webinar, if you want to register for that, there is a link in the comments. Otherwise, if you go to natptax.com/online, it lists all of our online learning options, including live and on-demand webinars. So that is available for everyone. And again, Sherry, I just want to thank you so much for taking the time this morning to share all of your knowledge with everyone. It was probably just the tip of the iceberg, like we mentioned, but there's a lot of stuff going on, a lot of information to be aware of this tax season, especially. Seems like we've said that the last few tax seasons. It's the most interesting one yet, but here we are. So
Never a dull moment.
right, absolutely. So just one more little note too, we mentioned the publications are available for professional and premium level NATP members. If you're not a member and you want to become one, go to natptax.com/join. And that is really all that I have for us today, Sherry, unless you have any other things you'd like to add in closing out.
No, just good luck with the form, or the schedule, I should say. If there are any questions at all, research is always available to help you out. And they're going to be getting a lot of calls on this. So they're going to be able to probably help you out pretty easily, because after a while, it's just going to be really, they'll get the hang of it much faster than most people, because they'll be answering so many questions. So don't hesitate to use research if you need additional help with the form. Okay?
Absolutely. And one last little note for everyone who is watching. We are actually going live again next week to talk about the brand new IRS Form 7203. We are offering a webinar on that. I'm having the webinar instructor, Amy Wall, on. So more tax season info for you coming next week. But this has been just a great morning, Sherry. So thank you so much again for spending time with me and with
Thanks.
everyone watching. And we will talk to you all again soon. All right. Bye, everyone.
Bye.